I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up this hour, one of the biggest pops on record. Airbnb closes at more than $144 a share, more than doubling its IPO price and pushing the company into the $100 billion market cap club. My wide-ranging chat with Brian Chesky and his reaction to the price you don't want to miss. Plus, opportunity for all. Merck CEO Ken Frazier and IBM Executive Chair Ginni Rometty are among 37 executives pledging $100 million to hire 1 million Black workers over the next decade. We will talk to both of them about this massive effort to close the opportunity gap. And apology not accepted. The AI ethics researcher who left Google in a controversy that is still unfolding, CEO Sundar Pichai, has called for an investigation. We're going to hear from Timnit Gebru in her own words. All of those stories in a moment, but first, U.S. stocks closed mixed today amid continuing stimulus stalemate in D.C. A tech rally, though, did materialize. A wild ride. Bloomberg's Abigail Doolittle joins us now from New York. All of us, Abigail, watching Airbnb today. Walk us through the day.
That was certainly the big story and the anticipation prior to its opening. Now, on the open, though, stocks opened pretty bearishly. The Nasdaq at one point down 1%, but at the end of the day, up 0.3%. But it was a mixed close because there is so much uncertainty around stimulus. Also, what do these big IPOs mean? Are we looking at another tech bubble? But as you mentioned, the tech-heavy Nasdaq did finish higher, up about 0.5%. One of the big winners there was actually Tesla. And other stocks along those lines. Facebook, on the other hand, though, a bit of a drag there, although well off the lows, down just 0.3%. Of course, more follow through from yesterday's news about the antitrust suit coming from the FTC in states. So some folks taking that as more than a shot across the bow, but at the end of the day, a little bit of complacency there, perhaps. A top stock, though, Starbucks, up about 5%. They put up a great investor day where analysts are very positive on the fact that they raised the guidance for fiscal year 2022, which one analyst over at Oppenheimer is saying will force analysts on the street to raise their estimates, and therefore targets will come higher. Right now, the average Bloomberg target is 104. The stock is at 105, suggesting that maybe if that analyst is right, there's more upside ahead. Plus, they're talking about refranchisee opportunities. But the big story, as you were just mentioning, if we take a look at Airbnb on the day, just extraordinary. One of the top performing IPOs on its first day ever, up 113%. That $100 billion, greater than $100 billion valuation that you were just talking about. DoorDash, of course, yesterday, also a huge IPO, up 85%. At one point today, it was down more than 5%. On the close, down a very modest 2%. But playing it forward, it would be interesting to see whether or not Airbnb cools off a little bit tomorrow after the excitement, although it seems as though this excitement is here to stay. But after 13% up, Emily, it'll be interesting to see whether or not there is some sort of a small pullback tomorrow.
Absolutely. Abigail, all eyes on the shares tomorrow. Thanks so much for that update. Sticking with Airbnb, I did catch up with CEO Brian Chesky earlier today. I got his reaction to Airbnb's IPO price doubling live on air. Take a listen. We just got indication on your opening price. Shares indicated to open right now at $139 a share, which is more than double what you priced at. I mean, are you at all concerned about froth? What do you think about that number and the potential that you're leaving billions of dollars on the table?
That's the first time I've heard that number. When we, in April, we raised money, and it was a debt financing. That price would have priced us around $30. So I don't know what else to say. I'm very humbled by it.
At almost a loss for words there. Part of my interview with Airbnb co-founder and CEO Brian Chesky. We're going to have a lot more of that interview later this hour. But now to the topic of jobs and opportunity. 37 of America's biggest corporations are joining forces and pledging $100 million to hire 1 million Black Americans over the next decade. A new organization called 110 will lead the charge and focus on hiring and training Black workers without four-year college degrees and provide them what they describe as family-sustaining jobs with an average salary of $50,000. This in the wake of continuing urgency to keep the momentum behind the Black Lives Matter movement going. Joining us now for more, Merck CEO Ken Frazier and IBM Executive Chair Ginny Rometty, who are co-founders and co-chairs of this initiative. Ken, Ginny, thank you so much for joining us. This is huge, and the way that you are structuring it is really unique. Ken, why do you think it's important to focus on Black Americans who don't have those four-year degrees?
So first of all, thanks for having us. You know, the reality of the world is that only slightly more than 20% of Black Americans do have a four-year degree. And we can talk about sort of the historical reasons why the education system hasn't really met their needs. And we know that there's some structural barriers in our society that have disproportionately affected Black Americans. All of that means that if we continue to sort of reflexively hire based on credentials rather than based on skills, then we are, in effect, keeping a lot of people who are talented but don't have access to the economy from really participating in the economy. And so I think what we're really trying to do with this coalition of 37 leading companies is to create, in effect, an economy of scale when it comes to demand, to have a demand on our side for these kinds of people. We've got to examine our own internal hiring practices and ask ourselves which jobs really do require a four-year degree versus certain skill sets. And if we can actually hire a lot of people who actually have the skill and the training, we can actually do a lot to change the country.
Ginny, you obviously ran a huge company, IBM. Job creation, opportunity distribution was a huge part of your focus, but you also know the barriers to progress. Why haven't companies been able to do this sooner on their own?
Well, actually, you know, Emily, of all 37 companies joining us, I'd have to say every one of them has tried, and in many cases successfully, doing something. But the numbers don't belie what's happened, in that we all could do better than what we're doing individually. And that's, to me, the beauty of this coalition. It's that a group of companies who said, look, individually, we can keep doing something, but it's not scaling. And part of why it doesn't scale is these structural barriers that if we work together, we each can knock them down. So Ken named one, which is around you're over-credentialing the request in a job rec for your hires. Now, I've been at this a good 8 years that you're referring to. And 8 years ago, 100% of IBM's jobs required a PhD or a university degree. We really went through and said, which ones absolutely had to have that to start? Or could you have gotten the skill another way? Because we needed the employees. And we found 43% of our job requisitions today do not require that four-year degree. And then, by the way, it's 15% of our hiring last year. 75% still went on to get college degrees. And in fact, we've had our first PhD. So the structural barrier was how hiring was looked at. Then to the other side, the other barrier that this group is really going to address is, I call it the supply side. So when you go to the market to look for Black talent, there needs to be more sources of it. And today there are many community colleges, non-for-profits, very good, but all subscale, all fragmented. And as a company, you go to hire, your HR group may only be able to deal with 5, 10 of them. But now if we collectively help them scale, we can match supply and demand. And the ultimate currency is a job. And that economic opportunity is what in the end does give you racial justice. So to me, we work on all these kinds of barriers.
The targets here you're setting are really impressive. Companies are committing to hire 250 to 500 Black workers in just the first year who weren't going to be hired anyway. Ken, how will you benchmark progress over 10 years? What sort of accountability will there be?
Well, so first of all, I think the main thing is we set a real clear goal of 1 million jobs over 10 years. We knew that was a stretch goal, but we didn't want to say that we were going to do something that wasn't meaningful. So what we're asking each company to do is to make sure that they're hiring over and above what they would have done before. And I should make another point, which is that these 37 companies are sort of the vanguard for this movement. They're the early adopters, but we expect to actually expand beyond those 37 companies. We're going to use our suppliers. We're going to reach out to nonprofits. It's importantly, small to medium-sized companies, which hire the bulk of Americans in this country, are going to also be able to join this movement. So these 37 companies essentially put the seed capital down to create this startup that we're calling 110. I know your audience is used to hearing about startups. This is a different kind of startup. It's a nonprofit startup. It's to address the issue that Jenny talked about before, which is on the supply side, we have a lot of people who do a very good job of developing these people, but they're all subscale and they're fragmented. As we've gone around and talked to people, whether it's manufacturers or healthcare companies or IT companies, often there are open job requisitions right now that can't be filled because they don't know how to access black talent that actually has the skill sets. So what we're really trying to do, again, is create demand at scale that will allow us to offer those jobs that will cause the job training system, whether community colleges or whatever, to really create a situation where you're creating people who actually have these skills. And I want to make another point because we've been talking about the hiring aspect of this, and that is the other thing we're doing is we're creating a community of practice as it relates to African Americans who are employed by these companies, often with 4-year degrees. We see that there's a process inside the company where those people go into the companies and they come out. They're not progressing through the system. So you have African Americans are 13% of the population. They're about 3% of senior managers and executives in these companies. So these companies are also putting together, if you will, a community of practice to share best practices and approaches. We're approaching this with humility because we've been trying to do this for years and we haven't done it well, but we think if we actually share best practices on how we can actually advance people in our companies now, we'll also make a big difference.
It is really interesting that there will be a designated startup, as you say, with its own CEO focusing on this. Ginny, what sectors in particular are you focusing on? Where do you think, across corporate America, the most progress needs to be made?
Well, it's a great question because often the first reaction a company has is, oh, gee, I don't have any of these kind of jobs. And when you go back and look, first sector is technology. Because you look at the need for software developers, cyber people, you look at the need for cloud developers, all of this can be done with a set of credentials, not necessarily a 4-year degree to start. And then medical technicians, advanced manufacturing. So we've gone through and inventoried all the jobs where you can begin. And another point, as Ken says, we keep adding on our points, but this is not just about your first job. Our job is to be sure you can have a career. And so many of these jobs, our job is around advancement, not just hiring you. But so start with technology first, healthcare, business and finance operations, advanced manufacturing.
Now, speaking of sectors, Ken, I can't let you go without asking about your vaccine efforts. I'm sure there's a lot of opportunity for job creation there. With positive news already out of Moderna and Pfizer, what is the path for Merck to a vaccine and the latest on your efforts there?
Okay, so we have 2 vaccines in development. Obviously, they're not as advanced as Moderna and Pfizer, and those are fabulous vaccines based on the efficacy data that we see thus far. But we continue to work on vaccines that we think there will be a need for many different vaccines for different subpopulations. So we continue to do that, as well as to work on, importantly, therapeutics, antivirals, for example. We have one that's in late stage development that we actually hope will actually be able to be used for people who are infected or people who've been surrounded or being around people who've been infected, because we think this will actually help knock down the virus and prevent it from replicating. We also have another late stage drug that has pretty stunning data with respect to people who are really, really sick. The most severely ill people actually reduces the risk of deaths by about 50%. So vaccine development, also antiviral development. I think we have a lot to be optimistic about in this country, but in the near term, even with these vaccines, Moderna and Pfizer, we just got to allow them to be given to the people who need them the most. That means healthcare workers, vulnerable people, and eventually we'll have enough to roll out across the country. But that's going to take more than 6 months. So we're just going to have to heed the public health instructions about masks and keeping our social distance and our hygiene.
All right, appreciate that update, Ken, especially as today the FDA is meeting on Pfizer. Ken Frazier, Ginny Rometty, thank you so much for sharing this new initiative with us. We will be tracking it, we will be following it, and really appreciate you taking the time to stop by. Okay, coming up, Airbnb's IPO surging out of the gate on its debut. It is not just Brian Chesky who's a little stunned. I'm going to speak to longtime board member and Andreessen Horowitz managing partner Jeff Jordan, who was surprised as well. That is next. This is Bloomberg. Airbnb closed the markets today at well over double its opening price. I spoke with an early investor in the company, Jeff Jordan, managing partner at Andreessen Horowitz, also a board member at Airbnb for 9 years. I asked if he too was surprised by the company's new $100 billion valuation.
You know, it did surprise me a bit, given where we priced it. We suggested it was a little bit out of our expectations. That said, it's a really special company that has, you know, it's a category leader in a global market.
So you've taken companies public before. Do you think there was a misalignment or a mispricing here? Because that's a lot of money left on the table.
It's a lot of money left on the table. The markets have been pretty exuberant in recent days. You know, the DoorDash offer yesterday was equally exuberant. We expected some level of exuberance. This level surprises.
Now, Brian seemed genuinely surprised when I shared with him live on air that the price had doubled. You know, you've been at this with him for a really long time. I know you know all the war stories. How significant is it that they were able to take this company public in the middle of a pandemic after travel had been halted?
I mean, I was chatting with them earlier today. The U-turns in the business. Entering the year, we were super optimistic. We were planning for the IPO. The business was on fire. The pandemic hits, the business stops like a screeching halt. You know, I think it dropped over 80% in just a few weeks. And then to emerge, you know, 8-9 months later with this kind of opportunity, it has been quite a ride. Who would have thought you could take a global travel business public during a pandemic?
So what is your outlook on whether they can live up to that and how they live up to that? I mean, there's a lot of investor optimism, but a long road ahead.
Yeah, I mean, it's the same with any company. You have to perform when you're public, and you know they have a unique industry leading position, and it is one of the largest markets on the planet. And the planet is their market. So they have the opportunity in front of it. Now they have to show, you know, as I was telling Brian earlier today, you know, you just went from the minors to the majors. You got to show them what you got.
Now, you've got a lot of experience with two-sided marketplaces, OpenTable, eBay. You know, what is your advice to him going forward, given the uncertainty ahead? We still don't have a vaccine yet. They had expanded into a lot of areas that they then pulled back from to get through this. You know, what is the next iteration of the company as a public company?
You know, the thing that's been so interesting is watching how adaptable the model has been. You know, that no one is traveling internationally now in any shape or form. That was the company's core business in February or January and February. So to have the model be that adaptable, to be able to, you know, just kind of, you know, go from global travel to local travel, you know, and not miss a beat. You know, it is, you know, I think what we've all learned during this is double down on what makes the business special. And that is, you know, their core host and guest proposition.
Now, more broadly, when you look at the macro environment, tech has seemed so divorced and decoupled from what's happening in the real world. The stocks keep going up, valuations keep going up. You lived through 1999. Are you concerned about the frothiness? Are these valuations too high?
I don't have a real point of view on that because we're early stage private market investors. So what the public market's doing is you know, we monitor, but I don't have any expertise in it. I don't know if it's overvalued or not. There are a set of companies that are emerging now, particularly kind of, you know, 6-8 years after the iPhone, that, you know, the smartphone came, that are just really special companies. And so it's interesting to see that they're being well received by the public market.
Valuations are high in the private markets as well, though. And I spoke to another source in the venture capital world who said they're telling their entrepreneurs, if you can raise money now, raise money now. What are you telling entrepreneurs in terms of whether, you know, the environment could change at any moment, or whether the good times will keep on rolling?
I mean, the one thing that I've learned in Silicon Valley is the environment can change at any moment. And so you know, the capital markets are open, capital markets are closed, capital markets are this or that. So I think you know, what you try to control what you can control, and then, you know, and then brace yourself for uncertainty, because that is the one constant, is uncertainty.
Jeff Jordan, their managing partner at the venture capital firm Andreessen Horowitz. Coming up, Disney's highly anticipated Investor Day gets underway, highlighting the success of Disney Plus. We'll have all the headlines next. This is Bloomberg. Disney holding its virtual Investor Day. Disney Plus off to an incredible start. Bloomberg's Ed Ludlow is in San Francisco with the headlines. Ed, what are the biggest highlights so far?
Incredible start, Emily. It's growing, and Disney's going to continue spending on it. 86.8 million subscribers as of December 2nd. You'll remember they'd initially forecast 60 million subscribers over 5 years. They have blown through that. We're still waiting for a 5-year new forecast. But where they're going to be focused is on exclusive series on the Disney Plus platform. They promised 10 new Star Wars shows on Disney Plus over the coming years, 10 new Marvel series on Disney Plus. A lot of questions about what they do with their blockbuster movies. Executives saying they will debut those movies at theaters first, but there will be some examples where they release a new film on the Disney Plus platform at the same time as bringing it to theaters. One that a lot of people have been watching because the pandemic has shifted consumer behavior around the movies so much. Finally, they are going big on emerging markets, investing heavily in areas like India, in new markets in Eastern Europe to bring Disney Plus either in its own form or in association with existing partnerships that they have in those continents. The other area they're going a little bit bigger on is sports, bringing new shows to ESPN. But what they want to do principally is extend the reach of Disney Plus, a new agreement with Comcast, an extension of their agreement with Verizon that would see premium Verizon subscribers get Disney Plus bundled with ESPN as part of their mobile phone or internet package. They are going to spend money. We haven't actually had any figures yet, but what we know when it comes to Disney is that content is king, and that is where they focused, and that was a big part of their business reorganization was earlier this year. Emily.
Absolutely, and Disney Plus going to be a huge part of the company's future, especially as the pandemic continues. Bloomberg's Ed Ludlow in San Francisco. Ed, thank you so much for that update. Coming up, we're going to have much more of my wide-ranging interview with Airbnb co-founder and CEO Brian Chesky. Why did he decide to take the company public now? And how will the travel industry, hotels, and more be different after this? That is next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. After its long-awaited IPO, Airbnb debuted today, opening at $146 a piece, valuing the company at $100 billion. A big day for Airbnb, also the NASDAQ. I spoke with co-founder and CEO Brian Chesky earlier and asked for a gut check. How does it feel to take a company public when just months ago the pandemic nearly destroyed their business?
I feel really lucky. You know, sometimes in life, you appreciate something when you can face losing it. And so if I didn't appreciate it before this year, having stared into what felt like an abyss for travel, and then to kind of rally together with thousands of people and rebuild the company from the ground up, something that I think is stronger than it ever was before the pandemic. And I feel incredibly fortunate, and I feel like thankful, not just for all of our employees, but for our community, you know, our guests and our host who built this company with us. So this is a very humbling period for me.
So on that note, you say this company may be stronger now than ever. Why go public now when we're still in the middle of this pandemic nightmare? Why not wait till there's a vaccine or more clarity on the future?
We were prepared to go public this year. And then when the pandemic broke out, we put the S1 on hold, and I could never have imagined us going public this year when it was April or May. And then something pretty remarkable happened. People this summer, after having been kind of locked in their homes, sheltering in place, wanted to get outside, but they didn't want to travel far. So they started getting in their cars and they started staying in Airbnb. And at that moment, it became really clear that this business model is incredibly resilient, and that our hosts can adapt to really any changing travel behaviors. And it was that point that we thought, you know, we actually have a shot this year. This is our opportunity to bring shareholders into this company as this new, you know, the new travel season will be upon us, and people who understand just how resilient and unique this company is. We're really excited. And I'm excited that we can, like, for example, bring hosts in, tens of thousands of hosts in as shareholders as well.
Now, we just got indication on your opening price. Shares indicated to open right now at $139 a share, which is more than double what you priced at. I mean, are you at all concerned about froth? What do you think about that number and the potential that you're leaving billions of dollars on the table?
That's the first time I've heard that number. When we, in April, we raised money, and it was a debt financing. That price would have priced us around $30. So I don't know what else to say. I'm very humbled by it, and we know that we're on a very long journey, and we're going to be very, very focused. And obviously, today is a very special day for everyone, but the higher the stock price, the higher expectations, the harder we're going to be working, obviously.
There are still lockdowns and reopenings and lockdowns happening around the world. How is the fourth quarter shaping up for you? What are you preparing for the next few weeks as the COVID outbreak surges?
Well, the most important thing is health and safety, obviously. We've had to make difficult decisions. For example, in April, we decided to give refunds to more than $1 billion worth of customer deposits when people told us they couldn't travel. And this, of course, was really difficult for our host. And even though we were burning a lot of money, we took $250 million of our own balance sheet when it wasn't clear we could raise more money back then, and gave it to our host. And we always are going to make that our gold standard. So we worked with the former Surgeon General of the United States, Dr. Vivek Murthy, who now co-chairs the COVID task force, and we've instituted enhanced cleaning protocols. And we're just trying to work with every city and every government as best as we can to make sure that when people do travel, it's responsible.
Shares now indicated to price, Brian, $145 a piece. So I'm just going to keep you posted as we keep going here. Airbnb has performed better than its rivals since the summer, and specifically the hotel industry. How do you think the hotel industry looks different after this? How much will hotels be hurt by the pandemic in a way that Airbnb doesn't seem to be feeling?
Well, I think that's kind of up to hotels. What I know is this: the world as we knew it in January is over. And that means travel as we knew it in January is over. But that doesn't mean that any company is over. As long as companies are willing to adapt, they're going to be fine. And what people are telling us is that they want things that are more intimate, a little more private. They obviously don't want to be in crowded spaces. They want to make sure the right precautions are handled. And I also think business travel is going to still go on, but many of us are going to realize we don't need to get on an airplane to check in at midnight to have an 8 a.m. meeting. And the less actually travel for business and the more flexibility we have, I think more people may actually travel, especially nearby. And so honestly, I think this is a huge opportunity in the coming years for any travel company that wants to adapt. Hotels, Airbnb, anyone.
On that note, then, there have been some analyst notes out there saying Airbnb is looking like a better bet in the short term, but Booking Holdings is looking like a better bet if you want to get into this business in the long term. What's your response to that?
I mean, I'm going to let everyone that's a prospective investor decide who they want to bet on short term or long term. But now that we're talking about long term, I'll just say this. I'm 39 years old. I started this company with my two friends, Joe and Nate, when I was 26. And I remember back then we told people one day Airbnb is going to be huge. Thousands of people are going to use this company. And I guess what I would say, the reason I say that is we created this new category of travel. It seemed like a kind of crazy idea, and it just kept growing and growing and growing.
You told me experiences could be as big, if not bigger, than your homes business. But when we saw the S1, we didn't see a lot of details around experiences in terms of revenue or bookings. How does the experiences business right now compare to the homes business?
There aren't a ton of experiences happening right now because many cities and countries still have restrictions about people gathering. So actually, when the pandemic broke out, we actually put experiences on pause. In life, timing's everything. I thought this year would be a breakout year for experiences, then they're paused. We've now reopened experiences in countries all over the world. And I think that in the next couple of years, I'm very, very excited about them because of this reason. Experiences are like the purest manifestation of Airbnb. I mean, if Airbnb is about hosting, the experience is about the host. They provide connection. And in fact, 82% of the time a guest leaves a review in a home, they leave a 5-star review. 90% of the time they leave a review and experience, they leave a 5-star review. So they even like them more. And so there's a huge opportunity here.
Shares now indicated to price at $150 a piece, so now well more than twice where you priced them. Let's talk a little bit about the longer term. You know, you mentioned you pulled back from a number of different initiatives, whether it was end-to-end travel, airlines, boutique hotels, business travel, that list goes on. Now that you've raised this money, will we see you pick those efforts back up?
One of the lessons that I learned from this crisis is focus. I remember when I was at college, a professor once told me, Brian, you can do everything you want in your life, just not all at the same time. And it can be very tempting when you initially have success to start pursuing many things at the same time. So we are not going to lose our focus. We are incredibly focused right now on hosting and the host providing homes and experiences around the world. But I'm 39, and this is not the only thing we're going to do. We're just going to be very thoughtful and extremely disciplined and have a higher ROI standard when we are going back into anything new. And, you know, we just really look at certain opportunities that are perishable and certain opportunities that are non-perishable. So obviously some of the things we put on hold, we just felt like those opportunities will be there down the road.
Airbnb CEO Brian Chesky there, and we do have some really important breaking news. Now, a group of FDA advisors, a group of outside experts for the FDA have voted to approve Pfizer's vaccine benefits, saying the benefits outweigh the risk. Their recommendation that the FDA approve an emergency use authorization for the Pfizer vaccine is a non-binding recommendation, but it certainly will carry a lot of weight. We are just getting the results of this vote that a group of outside vaccine experts for the FDA are saying the benefits of Pfizer's vaccine, all the data that they're looking at, the benefits outweigh the risks. I want to bring in Bloomberg's Michelle Cortez, our healthcare reporter who's been following the meeting all day long. Michelle, walk us through what this means. It's a big deal.
The FDA advisors, it is about 24 of them, the world's foremost vaccine experts, have looked through all of this data, spent the day doing it, and have recommended that the benefits of the vaccine for preventing coronavirus infections outweigh the risks, even with the understanding that we don't fully understand either one of those yet. There are still risks that could evolve later. The benefits could wane over time. But at this moment right now, they are recommending that the FDA grant the emergency use authorization. And then this is important for everyone aged 16 and older. There was a lot of controversy over that. Some of the advisors were not comfortable with recommending it for those lower age groups, 16 and 17-year-olds. But in the end, by a vote of 17 yes, 4 no's, and 1 abstain, they have recommended to authorize.
So now that we have this recommendation, how likely is it that the FDA will issue this emergency use authorization, and how soon will that happen?
The FDA is expected to grant the emergency use authorization, and it's expected to happen very soon. I don't know whether or not it will come tomorrow. I don't think that people would be shocked if it does. If it takes until Monday, that would be surprising. I think most people are expecting the agency to gather this evening and tomorrow and have a discussion about how quickly they can act. And we could get a decision by the end of the day tomorrow. And certainly over the weekend, we're expecting to start rolling out some of these vaccines literally in trucks across the country.
Now, breaking the vote down, 17 FDA advisors voting in favor of this, 4 against, 1 abstention. So, Michelle, are you saying as early as Monday, potentially, Americans could be getting shots in their arms?
I think that it would probably be a challenge to actually get shots in people's arms on Monday. It is theoretically possible, but that would be challenging because of the details of the shipping. The vaccine has to be moved at very cold temperatures. It has to be transferred from the boxes that Pfizer is using to do that transportation, and they have to thaw. It has to be done very carefully. You literally have to have your staff set up. You have to have your vaccine clinics up and operating. So to be doing it on Monday would be definitely a stretch, but certainly by midweek I would be expecting that.
All right, a huge development out of the FDA. We will be watching closely for that emergency use authorization. Michelle Cortez, our healthcare reporter, thank you so much for joining us. I was just speaking earlier with Brian Chesky, the co-founder and CEO of Airbnb. Obviously, this is also good news for Airbnb. Once there is a vaccine out in the world, that means travel, that means life may go to somewhat of a new normal. I want to bring in Alfred Lin, partner at Sequoia, who is not just on the board of Airbnb, but also on the board of DoorDash. Alfred, huge week for you. You have the distinguished responsibility and honor of being on the boards of both of these companies. I want to get your reaction to where the market cap landed today. Airbnb's price more than doubling. What's your reaction?
Well, Emily, thank you for having me on the show. And, you know, I think as you saw from Brian's reaction, he was a little surprised. I think if we knew where it would land, we would have potentially priced higher. But at the same time, we don't really focus on valuation so much as thinking about, we've been partners with the company since 2009. In Airbnb's case, in DoorDash, it's been since 2014. Want to help them build enduring companies. We try to partner with them as early as possible, and then we want to help build them into category-defining companies into the future.
So would you say the same thing about DoorDash? I mean, both of these companies, both of your companies, just left a lot of money on the table. I mean, is there something in the process that is broken, or was there some sort of misalignment on price?
Well, I think, you know, in retrospect, you can sort of second guess a bunch of decisions, but I think what you're seeing in the market is this huge receptivity to both these companies and the potential for them. They both address very large TAMs. They're in the early innings of what's possible. They're the market leaders in their business. And today, Airbnb is about Airbnb, and they have a global network effect. They're a category-defining company. They define the category that they're in, and there's really no competitor in the space like them.
Now, Sequoia partnered with Airbnb in the seed round and invested in every round afterwards. And there were a lot of naysayers at the time who didn't think people would want to rent out someone else's couch. DoorDash just a few years ago did a down round. What did you see that others didn't?
Well, I can separate the two, and I can speak to both. In Airbnb, in both cases, I guess the sort of overarching thing is just having a prepared mind, understanding the space, having Dumbo years, what my partner Doug Leone likes to call it, be very sort of careful and listen to the entrepreneurs, and then dreaming with the entrepreneurs. And in both cases, those were true. But in Airbnb's case, our former partner, Greg McAdoo, was doing a landscape about timeshares and vacation rentals. That landscape didn't lead to a direct investment in that space, but then it prepared our minds when we heard the pitch from Airbnb. We just found that Brian, Joe, Nate just have a very differentiated way about thinking about the world. Whereas everybody was trying to sort of put travel into a commoditized space, they wanted to sort of create authentic experiences. And even back then, they believed it was a better way to travel, so that you don't have to travel like a stranger, and then you can belong anywhere. The belong anywhere came a little later, but all along the way, they felt like this is a more authentic way to travel. In DoorDash's case, I've always been fascinated, because I grew up in New York City. I've always been fascinated by the fact that New York City has a lot of things that San Francisco doesn't have. Now that I live in San Francisco, whether it's just a very, very efficient public transportation system, a great taxi network, and food delivery. And I was like, why doesn't San Francisco have food delivery? And we had actually met every single company in the space, from Grubhub to Postmates to Caviar, but we waited until we found Tony, Andy, and Stanley. And there's a combination of both having a strategic mind as well as being willing to operate in the very finest level of details. They've always thought about this as having a differentiated strategy by focusing on merchants first and then on suburbs. And so they just went where other people weren't willing to go.
Now, earlier this year, Sequoia sent a much talked about memo to entrepreneurs where you warned them to conserve cash, potentially cut jobs, called the pandemic the black swan of 2020. Fast forward, you've had a huge year. Tech has had a huge year. Andreessen Horowitz, Scott Cooper over there threw a little shade on that note you sent several months ago, saying winning investment strategy when a prominent venture firm, particularly one named after a tree, publicly announces that the world is coming to an end, go long. Do you think Sequoia got anything in that initial memo wrong, or was that the right call?
Well, Emily, you and I talked when the memo was published, and it was a very different time when we talked back then. People were rightfully concerned. We had seen what happened in China because we have offices in China and in India. We're a global partnership. We see these things before they happen. And it was very disruptive in India and in China. And it was very disruptive in the United States, and markets did crash, and sort of companies had to reassess. And our best companies all took some time, stopped, reassessed what was going on, became hyper vigilant about the facts on the ground. And then they thought about what they needed to do. They critically sort of planned out what they needed to do to get out of their situations. And for all those companies, you're able to break, assess, and accelerate out of the turn. And that's an important lesson from the Black Swan memo. And by the way, I don't think the memo was laid out in a way that asked questions. It didn't actually ask you to do anything that you talked about.
All right. We'll have to leave it there. Sequoia Capital partner Alfred Lin, great to have you on the show. Congrats on 2 big debuts this week. Thanks for stopping by. Okay, still ahead, the controversy surrounding a top AI researcher. Google says she resigned. She says she was fired. Timnit Gebru joins us to tell us her side of the story next. This is Bloomberg. Google CEO Sundar Pichai has apologized to employees and launched an investigation into how the company handled the departure of one of its top AI experts, Timnit Gebru. Timnit, a prominent AI researcher best known for showing how facial recognition algorithms are better at identifying white faces than black and brown ones, said she was fired after a dispute over an academic paper she co-authored. I caught up with her earlier today.
Our main problem was that some unknown group of people wrote some confidential document to HR that was then read to us that we're not even supposed to know about. And so we did not understand why this process happened. We did not understand why we couldn't have a back and forth, which is usually what you do when someone has issues with your paper. You have a conversation about it, especially if it's internal. If they had some sort of PR or policy risk, then the PR and policy people had a chance to talk to us about our paper because we gave them a heads up before we even wrote our paper, and we added them to the documents. So to have somebody just to give you an order to retract your paper with no further discussions is extremely disrespectful to researchers.
So did you resign or were you fired?
I did not resign. I believe I was fired.
Now, Sundar Pichai has apologized for the situation, and I want to read a portion of what he had to say. He said, "I've heard the reaction to Dr. Gebru's departure loud and clear. It seeded doubts and led some in our community to question their place at Google. I want to say how sorry I am for that, and I accept the responsibility of working to restore your trust." Some have pointed out he didn't apologize to you directly. What do you make of his response?
According to me, I tweeted about it. This is not an apology. There are a number of issues. First of all, he discussed my departure. It's a little bit more gaslighting, right? So how did my departure happen? It's not like a weather event like Jack Clark mentioned. It was caused by certain people, and they immediately terminated me in the middle of my vacation and did not even have my corporate access. I don't even know what events I've signed up for because I can't access my calendar. So he did not apologize for that. What he's sorry for, if you read the statement, is for the fact that this seeded doubts. He did not say we apologize for how we treated her and what we did. he is apologizing for the backlash that they are currently receiving. This is not an apology. Secondly, he talks about de-escalation strategies. For whom? I mean, I would appreciate de-escalation strategies for the managers and HR and legal people who decided to fire me, but certainly not for me, because I am not some sort of unreasonable, angry person who needs to be de-escalated or have some sort of strategy for. I'm a reasonable person you can have a conversation with.
Your work on algorithmic bias has been groundbreaking. You were on our show before when you used to work with Microsoft.
Yeah.
Google also does have a track record of publishing on the topic of responsible AI. Do you believe that Google can really do fair, effective, and probing research into AI ethical questions on its own products?
If they continue to treat people like me, raising issues on these products, either by immediately terminating them or censoring their research with no discussion, I do not believe that they will be successful. I believe that they can successfully publish. Of course, there are different degrees of band-aids or fundamental changes that you can make. So it doesn't mean that they can't continue to publish. But to really do successful research in this area, you have to be able to be introspective rather than incredibly defensive and disrespectful to said researchers.
Now, Google has, for many years says it cares about diversity, made commitments to diversity efforts, just doubled down on equity efforts earlier this year. What does this situation and the issues around your departure say about the way Black employees and employees from underrepresented groups are treated at Google?
I think they cannot continue to say they quote unquote care about diversity. People have been saying they care about diversity forever, but the numbers speak for themselves. And the way my situation was handled speaks for itself right after they decided to make these equity commitments. So I don't believe any of it. And that's what I wrote. That's partly what I was trying to say in my email. There's really no incentive whatsoever for them to do anything about it. So we should stop believing that corporations of their own volition will do something about this.
Do you still plan to present the paper that started this whole controversy? There's an upcoming conference, as I understand it, in March, where you might do that.
If it gets accepted to this conference because it's undergoing peer review, absolutely.
Timnit Gebru, former AI researcher at Google. We will be following Google's investigation into her situation. And that does it for this edition of the show. I'm Emily Chang in San Francisco. This is Bloomberg.